All right, today we are diving deep into one of the most talked about commercial real estate markets in the entire country, Houston, Texas. So, what's really going on there? What's making this city such a magnet for investment and growth? Let's get into it.
Right off the bat, you can just feel the energy. Houston is a true powerhouse. It's one of those top-tier markets that is consistently pulling in investors, developers, and big companies from all across the U.S. We're talking about a city with incredible scale and even bigger ambitions.
So here's how we're going to break it down. First, we'll look at why everyone has their eyes on Houston. Then we'll dig into the powerful economic numbers behind the boom. We'll get into the very different stories of the industrial and office sectors, touch on retail and multifamily, and then we'll wrap it all up with the key takeaways you really need to know.
So what is it that makes Houston such a fundamental piece of the U.S. commercial real estate puzzle? Well, it really boils down to this potent mix of strengths that just creates the perfect storm for development and investment.
And this quote really just nails it. It's not one single thing. It's that combination. A pro-business attitude, an economy that's way more than just oil and gas, and a population that just keeps on growing. Those three pillars, they're the engine behind everything else we're about to see.
Okay, let's get into the hard data that's fueling all this momentum. Because the story of Houston's real estate market is really a story about its incredible economic and population growth. And honestly, the numbers are staggering.
First, just think about the sheer scale. The Houston metro area has a population of 7.5 million people. That makes it the fifth largest metro in the entire country. This is a massive, major league urban center.
But it's not just big, it's growing, and I mean fast. Just between 2023 and 2024, the area added almost 200,000 new people. To put that in perspective, that kind of growth was only beaten by the New York metro area. People are absolutely flocking to Houston.
And all of those people, they are part of a tremendously productive economy. The region's GDP is over $500 billion. So you don't just have a large population, you have an incredibly powerful economic machine.
So you have to ask the question, why are so many people moving there? Well, a huge piece of the puzzle is affordability. The cost of living in Houston is more than 7% below the national average for urban areas. And when you compare that to other major U.S. cities, it's a whopping 24% cheaper. That's a massive draw for both people and companies.
And this is so important because it shows the city's economy is incredibly diverse. I mean, yes, it's the energy capital, but look at this. It's also the #1 metro exporter in the nation. It's home to dozens of Fortune 500 headquarters. You've got world-class healthcare, aerospace with the Johnson Space Center, and now it's becoming a huge hub for tech and clean energy. That diversity gives the city so much economic resilience.
Okay, so with that strong economic foundation set, let's zoom in on the property types themselves. We're going to start with the two big ones, industrial and office. And right now, well, they are telling two completely different stories.
This quote just perfectly captures the vibe of Houston's industrial sector. It is absolutely on fire. It's fueled by logistics, manufacturing, the Port of Houston. The whole market is just buzzing with high energy, constant activity, and this relentless push toward the future.
And the numbers totally back that up. A vacancy rate of just 6.3%. That is incredibly tight. It means space is scarce. You've got over 14 million square feet being built right now just to try and keep up with demand. And with almost 4 million square feet of positive net absorption, well, that tells you that space is getting leased up almost as fast as it can be built.
All right, now let's completely switch gears and talk about the office market. The story here is much more about transition. It's all about this flight to quality. After a few years of big changes, the market is finding a new normal. And the key trend is this: companies are leaving their older office buildings behind and moving into the brand new amenity-rich buildings to attract the best talent.
So at first glance, yeah, that 29.9% vacancy rate jumps out at you. It is high, but you have to look a little closer. There's still been over 4 million square feet of leasing activity this year. That tells you there is demand, but it's all focused on those top-tier buildings. Meanwhile, the older properties are struggling, which is why you see that slight negative absorption overall.
And this chart just lays out the story in one simple picture. I mean, look at that contrast. On one side, you've got the super tight industrial market at 6.3% vacancy, and on the other, the office market at almost 30%. It really is a tale of two completely different realities happening in the same city. So what about the places where people spend their money and where they live? Well, after a period of really hot growth, Both the retail and multifamily sectors are now kind of settling down, finding a more stable, sustainable pace.
The retail market is looking exceptionally healthy, which makes sense with all those new people moving in, right? A vacancy rate of just 5.6% is really strong. You still have almost 4 million square feet of new retail being built, and with $3 billion in sales, it's pretty clear that people in Houston are out there spending money.
And for multifamily, apartments, we see a similar story of finding a balance. A whole wave of new apartment buildings has pushed the vacancy rate up a bit to 9.7%. But demand is right there to meet it. Look at that positive net absorption. Almost 9,000 units have been filled this year. It just shows you that all those new residents moving to Houston need places to live, which is keeping the market fundamentally strong.
Okay, so we've gone through the whole economy and the 4 big property sectors. So let's just boil it all down. If you're looking at Houston as an investor, what are the most important things you need to take away from all this?
Here it is, in a nutshell. First, the foundation of the city, its economic and population growth, is rock solid. That provides a stable base for everything. Second, the industrial sector is the star of the show right now, no question. Third, the office market is a more nuanced story. That big vacancy number is hiding some real opportunities in the best, newest buildings. And finally, retail and multifamily are both normalizing, settling into a healthy, sustainable pace after a major boom.
And that really brings us to the final big picture question. Houston's market today is this fascinating story of balance. You've got a red-hot industrial sector on one side and an office market that's transforming on the other. So for an investor, the question isn't which one is better, it's which side of that scale, with its own unique risks and rewards, holds the biggest opportunity for you. Something to think about. Thanks for tuning in.